And joining in studio now is the Mortgage Minute guy. He's also known as Roger Schlesinger to his family and friends. Roger, always good to see you.
Good to see you, Don.
Now, Roger, we haven't spoken to you in about a good month and a half. There's been a lot of talk about the real estate market pretty much having hit bottom, and things are starting to recover. We're seeing housing starts go up. We're seeing home sales go up. What's your take on the situation?
Well, I predicted or I suggested that it hit bottom in May or April. I put out a column to that effect at that time. And especially in some of the better areas of the country, things have been very hot, but right at the entry level. So the entry level has jumped dramatically. The problem is there's no place for the people to move up to because, you know, basically there aren't enough loans for them to go, and there's a lot of talk about that. In fact, we are now getting the call again for Fannie and Freddie to raise the conforming limits, which we thought they were going to do 2 years ago, to at least 625 for the high-cost states, which are generally on both coasts. Some in the hinterland, but mainly on both coasts. We should be at 625. That would take a tremendous amount of pressure off of the lenders, and they could then come out with some some jumbo loans that they're afraid to come out with now, because jumbo right now starts at $417,001.
Yeah.
And it's just too low for them to deal with.
Well, there are no such things on the coast as a jumbo property that would that could take advantage of a $417,000 loan. You're talking $1 million and up.
Right. And so that's something that we really need. But yes, real estate has picked up, and there's a lot of reasons for it. And it goes back to the same old three. One, we don't produce enough houses for the population to live in, from the stuff that wears out and from the increase in birth over death rate. We need more housing. Number two, you really don't have to go past this, is the dollar is so weak that all the foreigners are coming in and getting their huge discounts again. And that's a big one, especially on the West Coast. Canada's dollar is way up there in relation to ours. And they are coming across the border in leaps and bounds. The Chinese are still coming in with a lot of money into the United States, and I understand the Europeans are still coming into the East Coast as far as being able to buy, because they're getting 30, 40, 50% discounts, so it doesn't really matter. And they were buying them when they were high. You can imagine what they're thinking about now when they're low like this. So that's a real important thing.
For people who live here and want to buy a home here, can they still get a mortgage?
Oh yeah, we have mortgages. The problem is the best jumbo mortgages in the nation are in 49 states, but not California. And the reason they're not in California is the jumbo capital of the world, and the lenders who have these great loans don't want to put their whole portfolio into California.
I see.
So they don't know how to shut it off, so they just price us out.
I see.
But we have terrific loans. I mean, for instance, we have 7-year ARMs, which is not a 30-year fix, but it is fixed for 7 years. It is amortized over 30. We can also make it interest only. We have them in about 4.625 with, in some cases, no points, depending on your loan to value and your credit score, all the way up to $3 million. So, I mean, these are terrific rates that we have out there, and we can do them almost anywhere, but not California.
How about, like I know during the real estate boom, there was a lot of loans being done, especially for self-employed people, stated income. What's that market like right now?
Don, I'm afraid to tell you, it hasn't improved at all.
Okay.
In fact, it's getting worse. We're going the other way faster now. More documentation, more ridiculous rules. For instance, we just got the 105% out. So for people who have paid their mortgages on time and have a Fannie or Freddie loan, which generally means a fixed rate, and they're underwater or they're very close, and they couldn't get over 90%, now we can go to 105. That's the good news. The bad news is if you have a first of 95% or more, that's a 1-point hit.
I see.
If you have a second and you want to roll it into it, you can't do that. If you have a HELOC, that's a second, you can't do it. You must subordinate. And if the CLTV, the combined loan to value of both of them, is 95% or more, that's another 1.5 hit. Now you want to buy the rate down to a reasonable rate, that's another point. So now you're at 3.5 points. It makes no sense.
Makes no sense.
None whatsoever. What it does do, though, for people between 80 and 95% on a first who don't have a second, or between 80 and 95% who have a first and second that adds up to no more than 95%, we can get you a loan at a pretty good rate without mortgage insurance.
You know, it's really interesting to listen to you, you know, talk about these numbers, talk about these statistics, because it is such a far cry from what we were talking about, you and I, on this program even 2.5 years ago. I mean, it was the easiest thing in the world to get a mortgage now, and you're telling us now that even though it can get done, there are so many hurdles and roadblocks and rules and costs involved that it's an entirely different circumstance.
Yeah, I'll just give you one example of one of my clients, and one of my oldest friends has a house worth $3 million, has a loan of $630,000. It's a rate and term refinance, meaning all we're doing is lowering the rate on it. He's semi-retired. He has $2.5 million liquid. Mm-hmm. He makes about $180,000. And you'd say, okay, he's got the loan, right?
Yeah.
No, not that easy.
He's got $2.5 million of equity in this property.
Equity in property plus $2.5 million liquid in the bank.
Liquid assets.
So he's got $5 million right there.
Okay.
He has 10 partnerships, of which 7 are limited partnerships, and they have to analyze those before they can move forward. I said, for what? Throughout the 7, they're limited, and the other 3, and the total income that the man made on those things was about $8,000.
Wow.
Because they were basically for tax reasons.
Of course.
And you know, we're into our 2nd month on this loan.
For people in that income level and are that diversified, you know, I'm sure in his mind, he's got some privacy issues he's considering when trying to get this $600,000 loan refinanced.
Yeah, it's just terrible. The first time we did it, we were with a bank and they were so busy. It took us 4 months. Now we're on to our 2nd month on this. This is a loan that in the old days it would be done in a week.
Right.
1 week. And
amazing.
It doesn't make sense, but you know, that's what we have to live with, and so we live with it.
Well, Roger, if someone needs your help to kind of charter their path through these obstacles, and we'll call it an obstacle course, how do they get in touch with you?
They can call us at 866-304-9378, or they can go to the website mortgageminuteguy.com.
Once again, Roger Schlesinger, that's what we call him. We also let him know he's the Mortgage Minute Guy. If, again, for more information, you can give him a call at 866-304-9378.
Correct.
9378. Thanks, Roger.
Thank you, Don.
We'll be right back after these messages. Please stay with us.